What's going on, guys? Welcome back to another video here. We have three absolutely amazing stocks that you guys absolutely need to consider, or at least keep on your radar going over the next couple of weeks and months here. All three of these are ones that I currently hold right now and are looking not only very strong on the charts, but also very strong fundamentally to fully capitalize on all of the opportunities ahead going into the rest of 2025 and beyond. Now, as always, we're obviously going to be talking a little bit about the broad market here, how the overall macro picture is looking so that you guys have a better understanding of what to expect next out of the broad market here. But before we get into all of that information, everybody, if you guys do enjoy the information and analysis I provide for you guys in these videos here, make sure you go down and hit that like button. Costs you nothing to do it, but it helps me out a whole lot in spreading this information out to as many people who actually want to learn. And again, make sure you're subscribed and turn on notifications so you're notified every time these videos do end up getting posted live. And also, special announcement, not sure if all of you guys heard yesterday, I am bringing back the daily public live streams here. Again, those are going to be starting at 10:30 a.m. Eastern time every single day. Those are going to be right after the private market open streams with the Less Trades More Profits private trading and investing community. Again, if you guys want to join the private community, make sure you check out that link down below and use code MAY. You get 50% off your first 2 months. Guys, it has really high reviews for a reason here. I want to make sure that all of you guys have the tools that you need to fully capitalize on all the opportunity in the market there. But again, let's get right into it here. Don't want to waste too much of your guys' time. So the first thing that we saw today that added a little bit of volatility to the market here was this ADP report, and some of the conclusions that we drew from this. Again, US hiring is losing momentum. The pace of hiring in May reached the lowest level since March of 2023. The ADP report, April total number of jobs added revised to 60,000 from 62,000. Now, again, this ADP report is going to be a little bit more accurate than a lot of these surveys because they're actually using social security numbers in order to generate a lot of the data here. So the market, again, was very reactive to this data as it came out today. Now, the other thing that we need to think about here as well is this ISM services data that came out today that honestly shook up markets significantly. Even though we didn't see any crazy amount of continued movement in the market today, this is a sign of things to come, because what we've seen before and what we are starting to see become even more prevalent is that the market and overall market participants are looking at one element of the data, and the Fed is really stuck on another piece of data, which I'm going to explain in a second here. So ISM services came out at 49.9 today, expected at 52, and the last at 51.6. New orders 46.4, expected at 51.6. Prices paid, this is what the market was really reacting off of initially, 68.7 versus the expectation of 65.1. Now, again, breaking this data a little bit down even more here, I have a couple of notes here. So again, that initial headline number, that 49.9, is really just signaling a contraction in the services sector of the United States here, especially with a reading below 50. Again, new orders coming down here reflecting weaker demand, and again, some more potential economic slowdown. But prices paid is what a lot of people in the market are a little bit worried about here. And you can see some of the comments down here talking about stagflation. But when you actually think about what's occurring right now, you have a really big disconnect between what the Fed is looking at in order to guide their policy actions moving forward and what the market is looking at. The market is very worried about growth slowing down because they have come to, in my opinion, the correct conclusion that even if we are going to see some price increases and really meaningful price increases as a result of this new trade policy here, a lot of these tariffs coming in, well, those are going to be very short-lived, but the effects on growth here could easily be long-lasting. And that is exactly why we started to see some very interesting movements today in the bond market and also some of these other projection tools for the federal funds rate going into the end of the year here. When we take a look at Treasury yields, we can see that the US 10-year Treasury yield came down significantly today, showing that there was a higher demand for bonds. Now, you could look at this and say, oh, this is just a flight to safety trade as people were rotating out of the equity market and going into the bond market. But when you actually take a look at the price action today on S&P 500 futures here, they're relatively flat. So I think, especially on a day-to-day basis, basis here, the argument for saying that move in bonds today was a flight to safety move, I think is pretty weak here, because we still did see a pretty significant bid for equities, even though there really wasn't much action across the board. So what are we actually seeing? Well, overall, investors as a whole are expecting that yields and overall interest rates are going to fall in the future because, well, if you think about it, if the 10-year opened up today at about 4.46 and you expect yields to move down in the future, well, it makes more sense to use any capital that you have to use to go out into the bond market and buy bonds for fixed income to go and make those purchases now versus waiting until a future date when interest rates, again, according to the market's expectations, could easily be a lot lower. And then to add even more weight and credibility to the argument I'm making here for this bond move, well, this is also coinciding with rate cut expectations for more than 2 rate cuts here moving up today. So again, we saw a day ago the projection or probability for 3 rate cuts going into the end of this year was about 24%. That is now up to 32%, with the probabilities for 2 rate cuts going into the end of the year starting to move down. Now, the other thing that we've talked about a lot, which I'm just going to touch on in this part of the video here, is that we still have yet to see a lot of this money that has flown out of United States markets, equity markets, bond markets in the first really quarter and a half here of 2025 start to come back. When that starts to happen as well, as investors start to gain more confidence in where the United States is heading as a country in terms of its economy and overall agenda with this new administration, well, a lot of that money could easily start flying back in here. Now, again, we are at some interesting points in the market here. We're kind of consolidating near these recent highs. Again, if we are able to get that clean break here of 6,000 on ES and take out, I believe this is last Thursday's high here, on kind of that announcement that these tariffs are going to be blocked here, even though that was reversed by the appeals court, we easily could see continued upside here. So let's get into some of these individual names. The first one up on the list here, again, I own all of these. These are ones that I have a lot of confidence in moving forward. The first one is SoFi here. So just based on this chart here, this is something that we talked a little bit about in the streams today. The risk here is actually that SoFi starts moving to the downside here, down to that 200 exponential moving average here, because again, SoFi isn't necessarily getting the respect from the market that I and a lot of other investors feel that it deserves right now. Would it be the best idea right now to go out and buy SoFi shares for the long term? Well, it's not the worst idea in the world, but it isn't really the best idea. For me personally, I would like to see us get down to that 200 exponential moving average here on the daily time frame, consolidate a little bit, and then start to push back up. That's what I would be looking for in order to add to my SoFi position. Again, I own shares of this one at $6.55. This is one that I highlighted to the private trading and investing community there. So shout out to all of you guys that are still in this one, witnessing some very, very significant gains. Now, in addition here, just taking a look at some of SoFi's numbers, we have seen significant amounts of revenue growth here. Again, exactly what we want to see out of a business like this. And in addition, again, we are seeing members growing significantly as well. We're at about, again, I would assume right now over 11 million members. And we also have that goal from Anthony Noto, the CEO, and just overall management at SoFi, that they are looking to hit 50 million members over the coming years here. That is a significant amount of growth, and I don't think the market is giving enough weight to that that it needs to in order to kind of price that growth into SoFi in the present, which is one of the reasons why I think this one does have a lot of future upside. And again, just thinking about the other things that they're doing here, adding crypto back, options, and making the user experience a lot better for their customers. Again, I think SoFi is set up to fully capitalize on all the opportunities ahead in the coming quarters and years. Now, moving on to the next name on our list here. Again, this is one of my favorite stocks. It is probably one of, if not the best investments that I have made up until this point in my investing career here. Guys, I know I look young. I'm 26 years old. I've been doing this since I was 14 years old, learning from some of the most successful financial professionals in the world. I've been around for a while here, and I love being able to really help you guys navigate markets here. But I own a bunch of shares of AMD at $11.39. As we were moving up to that $200 area last year, I was selling a bunch of covered calls, taking some of my shares off there. And again, my basis on this one is zero, but looking at this chart here, this is a very, very bullish setup. Again, we were talking about this one on the live stream today as well, when somebody was asking me about this name and when would be a good time to start buying AMD, and it really was this zone that I outlined for you guys, not only in these videos here, but also in the private community here. We traded down into this range here between 79 and 75 here. We ended up getting that bounce and are now starting to move to the upside here. But if AMD can reclaim this 200 exponential moving average here and get above this high, which was when that Humane deal was announced and other the buyback was also announced there as well, we can get above those highs, AMD could start moving rapidly into the 130 and 140 range. Now, in addition, we are also starting to see AMD's revenues really starting to ramp up here on a trailing 12-month basis here, which again, with the further adoption of AI, more developments in AI here, companies like AMD are going to continue to thrive. Now, again, they have also made some interesting strategic moves recently as well. Again, they sold the manufacturing side of ZT Systems, which they did acquire earlier this year. They made a couple other acquisitions, but just today we also saw AMD acquire Brium to strengthen OpenAI's software ecosystem here, which again is just going to continue to drive positive outcomes. And then in addition to this, we also have recently, I believe this was last week here, AMD acquiring Semi to drive next generation co-packaged optics for scalable AI infrastructure here. So this acquisition represents a pivotal advancement in AMD's fast evolving AI roadmap. Semi, having previously worked with AMD as an external development partner in the photonics domain, now formally joins the company to expand AMD's internal capabilities. Now, I will tell you guys right now that with the performance that we have seen with AMD, or really that I've seen with AMD over, I would almost say here, almost 10 years, 8 years, I was actually considering, after these covered calls that I sold expire in June, maybe trimming some more of this position here and just kind of rolling those profits into other investments. But with everything that I have seen out of AMD in terms of their fundamentals, a lot of these new strategic partnerships and acquisitions, I do not have any plans of selling any AMD shares in the foreseeable future. So I was thinking about selling some more, and now I am not considering doing that at all. I think this one is going to be an absolute monster over the next 5 years as well. Now, the last name on the list here is one that I've brought up in a couple of videos here, but it is one that we talk a lot about in the private trading and investing community. It is my most recent single stock purchase and research report that I wrote up for everybody. That is Novo Nordisk here. Now, this one is an interesting one to me because typically I don't usually like to go into the healthcare space, especially with a lot of these drug makers here. Again, I like to operate with at least somewhat of an edge in the market, and reading a lot of these drug trials and all of these new drugs coming out is just really not in my wheelhouse here. But again, this company is a little bit easier and simpler to understand. And when you take a look at Novo Nordisk revenues here from when drugs in these GLP-1s like Ozempic really started to become popular here, getting into the middle of 2021, going into 2022 here, we saw massive revenue growth here. Now, if you are going to try to make the argument to me that Novo Nordisk is going to be trading right near the levels that it was trading before it had this massive revenue spike here, well, I just think there's a big mismatch out there in the market. Now, again, we also have some other interesting developments with this one as well. The CEO will be stepping down here. Now, this article, again, it's kind of painting things in the wrong light here. Novo Nordisk is betting on a CEO shakeup to regain its weight loss drug edge over Eli Lilly. Again, Ozempic is still number one. I believe Zepbound is number two and Wegovy is number three. So again, Ozempic and Wegovy are Novo Nordisk, and Zepbound is Eli Lilly there. And with a lot of these other developments as well, Novo Nordisk says it submitted obesity pill for FDA approval. That is kind of that next race here in the GLP-1 space, making these oral GLP-1s so that customers and consumers don't have to go in for a shot. And again, in addition to this, we also have some really big partnerships with Novo Nordisk here to get Wegovy out to more consumers that do want these products here, especially with the end of compounding. So CVS to boost access to Novo Nordisk weight loss treatment for Wegovy, weight loss treatment Wegovy for patients on its drug plans here. Starting July 1st, Caremark will prioritize Wegovy on its standard formularies or lists of covered drugs, making it the preferred GLP-1 drug for obesity here. Again, just continuing to show how much of a lead Novo Nordisk still has on Eli Lilly here. Now, in addition to this, we also have a very significant partnership announcement here that was recently announced with Hims and Hers here. Wegovy is going to be offered at a discounted rate to new consumers of the product on the Hims and Hers platform, as some of these consumers are going to no longer have access to and lose access to the compounded versions, which is effectively just the knockoff version of Novo Nordisk Wegovy here, to get them then onto the Wegovy pipeline. So again, having access to all of those new consumers here, CVS making it basically the prioritized drug on their formularies here, is definitely going to be something that is going to continue to drive revenue growth for Novo Nordisk moving forward. So guys, that is going to wrap up this video here. If you guys have any other stocks that you guys want me to discuss, make sure you guys drop them down below in the comments. Or if you have any questions on what we covered here, again, drop them down below in the comments as well. But if you did enjoy the information and analysis I provided for you guys in this video here, make sure you go down and hit that like button. And again, make sure you're subscribed and turn on notifications so you're notified every time these videos do end up getting posted live. Until next time, guys, I will see you guys in the live stream tomorrow at 10:30 a.m. Eastern time. But until then, peace.